Hello. Yes, good afternoon, everybody. So today is 5th of May, and our title for today is going to be How to Draw Support and Resistance Levels Correctly. So the very first thing you want to do, we will first of all start by defining what support is, and then we look at what resistance is, and then we look at sample resistance, and then we'll finalize by look at how we can draw them correctly. So the first thing you need to know here is that even with the fact that we are trading, we are drawing support and resistance, we need to get certain things right. There have to be clear levels which are support and resistance, and then you have to have clear trend to your strategy. So let's load our screen. We have this where you, if you can see now, I'm on the main screen. The screen I'm having now is webinar title, how to draw support. And so if you can see that, it means we're on the same page. So we'll go straight to defining what support is, and that will get online. So look at this page here. This is a FreshForex website, and it's under the education, the tutorials. So from this page here, this is what is written about support and resistance. So according to this page, resistance levels, which is RES, is horizontal connecting the row of local high prices, maximum prices. Then when price reaches this level, it signals to sell for bears. Upon reaching resistance level, the number of selling offers is significantly increasing. Of course, it leads to drop of price, and chart goes down along the level of resistance. So this is a diagram. This is a sample diagram of how the whole thing is. So the highest place, which is here, when price moves from this point up to this point, the highest place, which is this one, is called the resistance. This the sell place, and the lowest place, which is this one, is the support. The same thing has been supported below here. Is a horizontal line connecting row of local lows. When price reaches it, this is a signal to buy for bulls. Upon reaching this support level, the number of purchasing offers is significantly increasing. It leads to growth of price, and chart goes up along the support levels. So this is the simplest definition of what support and resistance is. Another definition which I want to mention is that the highest place that price at reach within a particular duration, that's the resistance. The lowest place is called the support. So other terms you may hear about this one is, you may hear the word like ceiling. Ceiling is just close to the roof, and then there's also the floor. So those two are synonymous. Like the floor is synonymous to the support, and the ceiling is synonymous to resistance. If you hear somebody saying that we've just reached the floor, then that means we have reached the support. And anytime somebody says the word like we've reached the ceiling, that's the resistance. So we check real chart. Let us check the real chart for the same. So the chart is insignificant. We just want to see how what resistance is. We have this one. So as I've mentioned from the page we just read, resistance is the highest place price has reached within a particular time. So this is the resistance, the highest place at this point. This is called the resistance. The highest place at this point here, this is the resistance. Then the opposite is true for support. This is a support, this is a support. Then the lowest place, which is this one, is also a very good support. We have this. We are going to look at multiple examples before we eventually look at how we can draw it correctly. We also have this one, a very good resistance. Then price went down, it came back to the same point, another very good resistance. This is the resistance. We also have this as a good support. We have this, a support, a support, a support, a support, a support. There's this one. This was a very good support. As you can see from the lower side, like the price moved from the upper side, it went down, came back up, down, came back up, then down, up, before it reached this support. So a support basically is a place where you're supposed to buy from. Anytime price reaches the lowest low, that's the correct place to buy from. And anytime price reaches the highest high, then that's the correct place to sell from. Like if I'm looking at this chart at the moment, if this is a support, that's the correct place to buy from. Anytime price comes back to it in the future, then we are going to be looking for buy places, potential places for buying. And anytime price breaks below a support, it actually becomes the opposite. That is, if we have this as support here, a support, then price clearly descends below it. If it comes back to the same place, then that's a resistance. This is what I'm trying to say. Let me put it into a drawing so that we are able to see it correctly. This is a line. We have two lines. There's the very one on top, and there's another one which is on the lower side. Anything that is above the highest high is always the resistance. The lowest low is always the support. Like in this case, the top one is the resistance. This is the resistance. This is the resistance. And then the lower one is the support. This is the support. I've written that already. So basically what support means is a place to buy from, and it can also be said to be the place where demand begins to increase. That's another term. So at a resistance, we expect the supply to increase while the demand has decreased. At a support, we expect the demand to increase while the supply is decreasing. So anytime price moves from a support like this and heads straight to a resistance, we don't expect it to go just blindly upwards. We expect it to come back to the lower side and test the lower one, such that we have something like this, that price keeps remaining in between this range. So the whole place, this is a resistance, this is a resistance here, and this is a support there. The same place, when price comes back to this place, this is a very good place as a support. The same thing can happen if it goes back, a resistance, comes back down like this, we have a support, then it continues up. So the cycle continues. Anytime the price approaches any of the resistance, any resistance level, that is always the correct place to look for a sell from. And anytime price approaches a support, which is in this case the lower one, is the correct place to look for a buy from. So there are certain things. A support is not necessarily any place where price reverses from the lower side. A good support is a support which has been used previously as a support and as a resistance at the same time. So what that means is that this level is support now does not mean it was not a resistance in the future, in the past. And it does not also mean that in the future it may not be a resistance. It may be a support now, in the future it will be a resistance. So before you make the decision of buying at this point, ensure that the same level, which in this case is support, was used previously as a resistance. That's the correct place. That's now what confirms that you're supposed to buy. The same resistance we're using now as a sell place should be the same place which you're using as a buy place previously. So what that basically means is, anytime you have a level like this as a support, we have this. The first time we are using it as a support. The next time, the first time, this is what happened. We used it as a support. It went up, it came back as a support. It came back as a support there. Then it went up, it came back again as a good support. So what this basically means is, before I buy at this point, before you finally give this a tick that you're supposed to buy, ensure that the same place was actually being used as a resistance previously and a perfect sell place. So one thing you need to know is that anytime you have a level like this, what makes this level strong is how price gets in and out of it. Like if you have price getting towards this level in peanuts, like you have something like that, the price goes up slowly with no stress at all, goes up like that, you find that the price continues to move up at its own pace. Instead of spiking upwards, it actually moves back slowly like this, and then it continues up with maybe a small candle before we finally find that price has gone completely to the upper side. If this is what is happening, that the price is rising above a level the same way we are seeing, just know that this is probably a weak level. But if price crosses the same level with a big candle, like you find that the price was below, then it spikes up with one big candle from the lower side, then that's a possible sign that this level is a strong level. The same way, if the top one, before I say that the upper line is a strong one, I must see price rising above it with a big candle, and then price also going below it with a similar big candle. That's the only time you can say this is a key level. There has to be at least one big candle opening below and then closing above. And the same thing is true when price is going below it, it uses a similar big candle to get below it. That's the only time you can say that it's a key level. Another thing to know whether a level is key, around these levels, you're likely to see pin bars, engulfing candles, inside bars, and candles like that. So if price approaches a level, but then it approaches in peanuts, then it reaches this level and then exhausts around that level. It continues down, comes back to the same place, and then exhausts again for the second time. That you can see a pin bar. Probably that's a key level. That's another way you can know key levels. You cannot, you don't, it doesn't have to be, there's no defined procedure for that. Just that you need to know that anytime price approaches any key level, there tends to be exhaustions. And anytime price is breaking above or below a key level, it breaks with big candles. So that's something you need to take down, that there's no level where price just breaks up anyhow or below anyhow. Like in this case, we find price moving up, but it moves in peanuts. This shows lack of momentum. Although we are breaking upwards, there's actually no serious momentum to the upper side. But if you find something like this, that this was a very good resistance, and then price clearly ascends above it with a big candle, that's a sign that there's momentum, that we are likely heading to the upper side. So we'll check on a real chart to see if that is true. We'll delete this all first of all. Look at this. We have a level here. This is a very good resistance. As you can see, price used it as a resistance. Then it went down. It came back. It broke above with a big candle, continued up, came back to the same place, and now the price could not use it again. It could not break below it. So this is a good sign that we are heading upwards. If price breaks above a level with a big candle, there's extremely high chance that you are continuing that direction. And if price breaks below a level weekly, like in a lousy manner, then that's no clear sign that we are in that direction. It may be that we're just testing that level before we continue again to the opposite direction. There's also this. We have this as a very good resistance, as you can see from those are pin bars. So as you can see from what I mentioned, a good level must have these things. You must see pin bars. You're likely to see engulfing candles. This is an engulfing. Looks small, but it's an engulfing. This is an engulfing candle. Then it went down, it came back, a support, a resistance. It went down, came back, then there was a pin bar before we eventually go above it. So if you're looking at this chart and notice this is happening, that we have a good level and price has gone clearly beyond it, wait for price to come back to the same place so that you can buy. And if price continues to hold itself above that level, we are buying continuously. That is, I would find myself buying here. I would also find myself buying somewhere there. And if price gets back to the same place in the future, I would still have bought it, just as the price did not get to the same place. But if it would have come back to the same place, I would have picked a very good buy. This one, we have this as a good resistance here, but somehow the price did not come back to it. Also have this as a very good resistance. So before you finally say that this is a good resistance that you're supposed to sell from this point, ensure that the same level has been used previously as a resistance and as a sell place, or as a support and as a very good buy place. So in this case, instead of having my lines here, I would drag it down up to this level, and then I would place another line such that this was the support here, a support, which was broken. Price came back the first time, it went down the next time. So you're supposed to say the first time price breaks below a level, the best you should be doing is not do anything. Don't do anything, wait. And if price goes down and comes back the second time, that's the best time to look for a sell from. The second time and the subsequent ones are always the best ones to trade. So if this is a support and a sell place, the first time it is being used, you're not supposed to trade it. The next time price is using it, you're supposed to start selling. And even the subsequent on these ones, you're supposed to look for a sell. So we don't want to find ourselves in a situation where you have a key level, and instead of remaining by simple rules, you're not following those rules, and price then goes against you for no good reason. We don't want anything like that. A key level must be supported, and what I mean by must be supported, it must have been used previously. A key level must have been used previously. So if we have a resistance here, the same place must have been used as a support or a resistance previously, and there was an active sell. And I've mentioned already how you can know whether the level is strong or not. To know the level is strong, check for those candles that are happening around that place. If you find this exhaustion, inside bars, indecision candles, or maybe engulfing candles, that's probably a key level, because there's no other way. That's the only way. And you also monitor how price breaks above and below such a level. If such breaks are happening with big candles, then that's a good level. So we also have another level here that looks significant here. It's significant for me. I can see it's a little bit significant. We have this as a resistance. It went down, came back to the same place as a resistance. Then there's a big candle which opened below and then closed above. It retraced slightly, went up, it came back a support, it went up, it came back a support. So your job will be simple. The very first time price goes above such a level, you don't do anything. Wait for a retracement and enter, especially after things like this, after pin bars. So if this is a key level, the best way to be entering is after that pin bar, that which shows you that the people who are selling this retracement are actually exhausted. That's the correct time to look for a trade. That's always the correct time to look for a trade. And then also look for things like this. Any place where it's a key level, you are likely to see a candle with a big body and also a very big tail, closing or opening at the same place. So these are some of the features you need to know about a key level. It should have some pin bars, engulfing candles. It should be crossed by a big candle, and then price needs to show exhaustion around such level. So we are not just trading because this is a level. You need to confirm everything so that it supports a position. So if you have something like this, that there's a minor uptrend here, the best you should be doing is not to look for sell places. Like if I have an uptrend like this, price goes up, comes down, it goes up, comes down, goes back to this, then it breaks above. If this is an uptrend the way we've seen, instead of selling at this point, I would gladly be waiting for price to break above it so that I can buy in the direction of that trend. So that's another thing. Don't just trade blindly because this is a key level. The fact that it's a key level is irrelevant if it's not combined with the trend. So if you have a key level, something you call a key level, but that key level is not in the direction of the trend, it's probably not a key level. So that's one thing you need to have in mind, that if you have a key level that is not in line with the overall trend, it's not a key level. So the key levels, like when price is heading upwards, we are looking for resistance places to be broken so that you can continue buying in the direction of that trend. And when price is going downwards, we are looking for support levels which are likely going to be broken so that we sell in the direction of that trend. There is no point of trading against the trend. You will not make anything. There is no need. It's useless trading against the trend. So we have this. This is a very good. It's a very good example. Since this was 2012, we had this. Price has been actively upwards. We have been going up, and then as you can see, it has given us very few places to buy from. There's this. We also have this. This is just a very minor resistance here, which price went above, it came back, same place, before it proceeded upwards. We also have this as a resistance. So if price is to proceed upwards, it has first of all to break above the closest resistance levels. It's such a break which causes price to continue to that direction. So if you can't find a resistance, look for signs that we are continuing that direction. But if there are levels which look like good sell places, don't look for sell places. Wait for price to break above such places that you can be in the direction of the trend. Like in this case, we have price moving up. I've drawn my levels. This doesn't look good, but there's a level below which looks a bit good. This looks good, and this resistance also looks a bit better. So if this is now uptrend, the entire move is uptrend. Instead of selling when price gets here, I want price to clearly rise beyond this level, something like this. Let price continue up and even go above, then retrace back slightly before we see a move to the upper side. So this is one very good thing. This is a very good thing, that the only time you use support and resistance is when it's in line with the trend. If you can't find any good level, look for signs that are showing you that you are continuing that direction. So far, as you've noticed, we have focused so much on horizontal support and resistance levels. This is not the only one which is available. We also have diagonal support and resistance. They are also called trend lines. So the same principles apply for both of them. Anytime you have this happening, just a second, anytime you have something like this, anytime you have something that the price continues to make higher highs, something like this, this is still a resistance. This is still a very good resistance. A resistance, a resistance, a resistance. We have the same place. So in this case, this is a diagonal one, but it's the same principle that we were using while you were trading the horizontal one. Anytime price approaches such a place, before you sell anything, just ensure that previously we were selling the same way. We have this resistance. It's the next one, which is also a very good resistance there. There's also this, which is a resistance. Then you also have this, a resistance. And there's also this as a resistance. And then you have this as a resistance. So this looks like a sell. This looks like a very good sell, but there's something you need to have in mind before you sell this thing. Notice that if you have a level on the lower side, if I had something like this, this would be a very good support, a support, 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 a support, a support, and a very good buy place. So before you find yourself selling here, selling here, selling here, just understand that the current dominant trend is upwards. We are somehow heading upwards. Therefore, you don't sell here, you don't sell there, you don't sell there, but you wait and buy only in the direction of that trend. Like I would buy there, I would buy there, I would also buy this one, and I would buy the last one, this one. That means I'll not focus on a sell, but when price comes back to the same place, I'll look for a buy. So that's another one major thing. Don't trade against the trend, whether you're doing support and resist or whichever thing you're trading. Don't trade against the trend. Never find yourself trading against the trend. If the overall trend is upwards, focus on that uptrend. look at this level. We have this we have a level here, very good resistance. We have this as a resistance, then price begins to move upwards and the downtrend disappears where price is here. If that is true, that you're observing this chart while that is happening, just know that there's chances this level is going to be broken, even though previously the same thing happened but it was not broken. So the fact that the price has gone above does not mean that it will go above always, but it will tend to follow the trend. The more you are in line with the trend, the more likely you'll get it correct. Like we also have a resistance here, which is a good level there. A resistance, a resistance, a resistance. Then somehow price has actually gone above it. And the main reason is simple, is because the overall trend from when this happened has been upwards. As you can see, we have that the trend has been actively upwards. It has been upwards all through. So if the overall trend is upwards, we are heading upwards, and you have a resistance and a sell place, rest assured that place is likely being broken so that you can buy in that direction. So I hope that should make some sense, that we only buy in the direction of that trend. If the trend is upwards and you find yourself selling, you're not doing anything. Like from what I've mentioned here, the trend is upwards and this is the resistance place and a very good sell place. Instead of selling at that price, wait for price to go up, retrace slightly, then pick a buy from that point. Wait for price to go up, retrace slightly, then continue picking a buy. So in this case, this is also support. This is also a very good support, just that it's a dynamic support. It's not on one straight line. It's a dynamic support. So far, we've looked at like three types of support. We've looked at the horizontal one, we have the diagonal one, and then we also have the dynamic one. The dynamic one is not a straight line. It's like some line which is not a straight line. You have this. So anytime the price goes above and comes back to the same place, that's the dynamic support. Anytime it goes up and comes and sits on this one, that's the dynamic support. Anytime it goes up and comes and sits on this one, that's a dynamic support. Then it goes up, a dynamic support, up, dynamic support, and like that. So thank you very much. I hope that covers something which we've not looked at before. We've tried defining exactly what support levels are and how to get them correct. We, like in this case, this a resistance being broken becomes a support and a very good place to buy from. So the reason we are buying here confidently is because previously the immediate trend has been upward. So whoever buys there is buying in the direction of that trend, which should be the case. You don't buy against the trend, you buy in the direction of that trend. You trade in the direction of that any trend. So if we are upwards, focus on a buy. If you are downwards, focus on a sell. So get key levels on the same chart where you're looking for a sell. Wait for them to be broken, especially to the lower side, then trade in the direction of that trend. I hope that makes some sense. That should make some little sense now, that we are not only doing support and resistance levels, but we combine them with key levels. I mean, we combine key levels with the trend so that we are trading only one direction. Don't find yourself trading two directions, because that's tricky. Sometimes you'll find a chart that you appear to be seeing two directions. That's not a clear chart. You need to have one clear, because that's what rules. At the end of the day, there's only one direction which is dominating, and that's where we are headed. So find that where we are headed and trade in the direction of where overall we are heading. This one, we have this. So this is just a very good support which price has broken below. This one, a support, price went below, it came back, went down, it came back, a resistance. So while somebody was buying here, if you notice that this somebody was buying actively and the price is at the same place where somebody was buying from, just know very well that that could be a very good place to sell from. We would have that as a sell, would also have that as a sell, and then you have this one as a very good sell, and even the subsequent. So your job will be simple. If you sell it here, rule number one, don't get out until the price has hit at least two, I mean like double whatever you are risking in that trade. So if you pick a sell successfully at this point and you're risking maybe 10, let price go up to double, then get out. If price comes back, you do the same thing. That ensures that the moment when price is under, you sell, but the price does not go on your side, you only lose something, just a fraction of what you've earned before, not everything. So that's one thing you need to take note of. As much as we are doing a level, we are trading support and resistance, so we are doing something that looks like that. Risk management still remains to be everything. That is everything you need to know, how to control the amount of money you're losing in any trade and how much you are earning in any trade. So thank you very much. That should bring us to the end of today's webinar. We meet again tomorrow at the same time. I mean at 12 GMT.